The 27th of July, 2026, marked a pivotal shift in the global semiconductor race. Changshin Memory Technologies, trading under the name CXMT Corp., made its long-awaited debut on Shanghai's STAR market, and within minutes the stock had rocketed as much as 500% above its issue price. Shares priced at just 8 yuan and 66 fen opened dramatically higher and traded around 52 yuan, pushing the company's market capitalization to roughly 3.5 trillion yuan, or close to 489 billion US dollars. In a single trading session, Hefei-based CXMT vaulted past China's established tech and industrial giants to become the single most valuable company listed on any mainland Chinese exchange. For a firm that was posting losses only about 1 year earlier, the scale and speed of that revaluation stunned even seasoned market watchers. CXMT's offering raised 57.92 billion yuan, or roughly 8.6 billion US dollars, with the possibility of proceeds climbing to 66.61 billion yuan should its over-allotment option be fully exercised. That makes it the second largest fundraising in the history of the STAR market, trailing only SMIC's landmark 53.2 billion yuan listing back in 2020. And it stands as Asia's single largest IPO of 2026. Founded in 2016, CXMT transformed Hefei from a mid-tier provincial capital into a national semiconductor stronghold, growing in under 1 decade from a regional startup into China's undisputed champion of dynamic random access memory production. CXMT's path to the public markets was anything but smooth. The company first filed for its STAR market listing with an initial target of around 29.5 billion yuan, and the process was paused in March of 2026 after regulators flagged outdated financial data in its prospectus. It was also the first company to go through the exchange's new pre-review mechanism, a confidential style submission process introduced by the China Securities Regulatory Commission to protect sensitive technology details from premature disclosure. After months of scrutiny and updated filings, the offering resumed in mid-July, with book building opening on the 15th of July and investor subscriptions following on the 16th, ultimately clearing the way for its blockbuster debut on the 27th. The sheer scale of CXMT's listing rattled the broader market well before the first trade printed. Because investors had to lock up enormous sums of capital to chase an allocation, the STAR 50 index tumbled nearly 20% from its July 1st peak in the days leading up to the debut, as money drained out of other technology names. The China Securities Regulatory Commission responded by convening emergency sessions with major asset managers and brokerages to discuss market stability. State media downplayed fears of a liquidity crunch, pointing to past mega listings that saw markets stabilize relatively quickly once the offering cleared. Demand for CXMT shares reached extraordinary levels across both retail and institutional channels. Institutional bids for the company's allocation exceeded 500 times the number of shares on offer, one of the most oversubscribed books seen on the exchange in years. Retail investors piled in with similar enthusiasm, leaving many with only the slimmest chance of actually landing shares in the final allotment. Analysts described the frenzy as a reflection of near-total domestic conviction in China's push for memory chip self-reliance, arriving at a moment when confidence in the broader tech sector had otherwise been wavering. Strategic allocations in the offering revealed just how deeply CXMT's fortunes are now intertwined with China's biggest technology names. Cornerstone investors reportedly included major players from cloud computing and electric vehicle manufacturing, locking in stakes ahead of the public debut. That alignment binds China's AI cloud infrastructure build-out, its electric vehicle supply chains, and CXMT's chip manufacturing pipeline together in a way few other listings have managed, giving CXMT a built-in customer base as it scales output. CXMT built its early business on low-power DRAM for smartphones and consumer electronics, a relatively modest starting point in a market long dominated by foreign suppliers. Over the past 2 years, though, the company has pivoted hard toward DDR5 memory built for high-performance servers and cloud computing, chasing the enormous appetite created by the artificial intelligence boom. Backed by Beijing's push to cut reliance on foreign chips, that shift paid off dramatically. The company's first-half 2026 revenue is expected to jump more than 7-fold year-over-year, landing somewhere between 110 and 120 billion yuan, with net profit projected between 66 and 75 billion yuan, a sharp reversal from a loss the year before. CXMT's dramatic rise is unfolding against the backdrop of the most severe global memory shortage in recent history, as Samsung, SK hynix and Micron redirected manufacturing capacity toward the pricier high-bandwidth memory used in AI accelerators. Supplies of conventional DRAM tightened sharply worldwide. Research firm IDC has estimated that AI data centers could consume as much as 70% of the world's memory output in 2026, up from roughly 20 to 30% back in 2022. That reallocation left consumer devices fighting over a shrinking remainder. And analysts at Goldman Sachs have noted that some suppliers see potential for conventional DRAM prices to keep climbing by double-digit percentages, quarter over quarter, throughout every quarter of 2026. Those conditions created close to ideal ground for a fast-scaling new entrant like CXMT to grab market share that the established players were, for the moment, leaving on the table. The same memory crunch fueling CXMT's rise is the reason gamers have watched graphics card prices climb through 2026. Every modern GPU relies on GDDR6 or GDDR7 memory soldered directly onto the board, and those chips come from the very same three suppliers now prioritizing AI memory over consumer parts. For most of 2025, GPU makers were shielded by fixed-price supply contracts, but those deals expired at the end of the year, and 2026 renewals landed at dramatically higher prices. Reports indicate AMD raised the memory kit prices it charges board partners by roughly 10% around January of 2026, with NVIDIA following close behind, and a second round of increases arrived around July. Industry testing by outlets like Hardware Unboxed estimated that a 30% rise in memory costs alone could add $25 to $30 to the price of a card with 12 gigabytes of memory, while a 50% rise could add $45 to $55 on top of whatever margin board partners and retailers tack on. The pain has not stayed confined to PCs either. Nintendo raised the Switch 2 by $50. Sony pushed the PlayStation 5 to $649 in a second price hike, and Valve lifted Steam Deck pricing by roughly $240 to $300, all citing the same memory and storage shortage. It is tempting to hope that a new, aggressively scaling DRAM producer like CXMT could quickly flood the market and send memory prices tumbling back to earth, cooling off both RAM sticks and graphics card prices for everyday gamers. There is a real mechanism behind that hope. Every extra wafer of conventional DRAM that CXMT ships is one less wafer of scarce supply that Samsung, SK hynix, or Micron need to divert away from AI accelerators, and CXMT's tens of billions of yuan in fresh IPO capital are earmarked specifically for mass-producing more memory wafers. Some analysts at Tom's Hardware have already flagged early signs of the price surge cooling as consumers hit an affordability ceiling heading into the third quarter of 2026. But most forecasters remain cautious about calling a quick turnaround. Intel has pointed to 2028 before conditions meaningfully normalize. Silicon Motion has warned the shortage across DRAM, NAND, and high-bandwidth memory could persist into 2028, and SK hynix itself has forecast that 2027 could be the worst year yet for the shortage, with tight conditions potentially stretching all the way to 2030. New memory fabs, including CXMT's own expansion lines, take years to plan, build, and ramp to full yield. So relief for gamers waiting on cheaper graphics cards and RAM upgrades is likely to be measured in years rather than months, even if CXMT's rise is one of the few genuinely positive forces pushing in the right direction. Adding to the buzz around the listing, reports surfaced earlier in July that Apple has begun testing CXMT's DRAM chips for use in devices sold within China. While nothing has been formally confirmed as a supply agreement, even the possibility of Apple qualifying a Chinese-made memory chip for its product line is a notable milestone, signaling that CXMT's output may be closing the quality gap with established suppliers faster than many analysts expected, at least for certain product tiers. For all the excitement, CXMT is racing forward with real technical and geopolitical constraints. The company has no access to cutting-edge EUV lithography equipment, a restriction tied to export controls on advanced chip-making tools. It also carries a designation from the U.S. Department of Defense as a Chinese military-linked company, a label that limits where its products can be sold and used internationally. Industry estimates suggest CXMT's cost per bit still trails Samsung and Micron by roughly 30%, a gap rooted in less advanced process nodes and lower yields, meaning the company's next challenge is proving it can close that efficiency gap without the newest manufacturing tools available to its rivals. Based on 2025 sales figures disclosed in its prospectus, CXMT held a 7.67% share of the global DRAM market, putting it well behind the dominant trio of Samsung, SK hynix, and Micron. Armed with its multi-billion-dollar war chest of fresh public capital, the company now aims to aggressively narrow that gap. One investment executive told CNBC he had no doubt the company would eventually grow into a global leader, framing it as a question of timing rather than whether CXMT becomes a true global challenger in the sector. Analysts caution that breaking into the top tier will still require years of sustained investment in node miniaturization, yield improvement, and international customer expansion. The successful listing of CXMT signals more than a single day's financial windfall. It marks a structural realignment within the global chip industry, and potentially the first real crack in a memory shortage that has made every gaming PC, console, and graphics card more expensive over the past 2 years. With capital, surging domestic demand, and strategic alliances with China's cloud and EV giants all aligned in its favor, China's memory pioneer is positioning itself to challenge Western and South Korean dominance over the coming years. Whether CXMT can translate this record-breaking debut into a lasting technological edge, and whether its expanding output can genuinely bring RAM and GPU prices back down for gamers, or whether equipment restrictions and cost gaps hold it back, remains the central question hanging over the entire sector. Will CXMT close the gap with the big three, and will your next graphics card actually get cheaper before the decade ends? Share your perspective in the comments below.